What's next for markets?
I'm Michael Kantrowitz, Chief Investment Strategist at Piper Sandler, where I lead the portfolio strategy team ranked number one on Wall Street in the All-America Institutional Investor Research Survey. Welcome, Jan. I was looking over your note over the weekend on Sunday. The title was Day 16, Expect Across-the-Board Repricing, War Far From Over. And one of the things you wrote in there that really caught my attention, I'll say the line here, which is, I quote you, "This is the scariest thing I've written in a long time," end quote. What were you talking about, and can you unpack it?
Happy to. And I think it caught your attention because I wrote it in bright orange, which is code for please read. And the point there is that a lot of people talk about taco this, taco that. They'll just call it a win and goes home. The problem is, and now that you have actually created a blockade of the Strait of Hormuz, and I purposely call it blockade because that's technically incorrect, right? There's no warships of the Iranians, there's no mines that are blocking ships. There's ships actually going through. There's a few Iranian boats going through, there's an Indian boat going through. So it's a selective closing of the strait. The point is, I think that the Americans and the Israelis are going to have real trouble reopening that thing by force. That will take some doing. And yet, that's what you have to do. You have to open the straits. That is the real crux of the matter here. So never mind regime change or degrading the missiles or degrading the nuclear supply chain or taking out the head of the snake and the whole regime. No, that could take a very long time. You had in the beginning of this war, you had one or two commentators say, we can achieve a regime change in days or in weeks. The regime is as weak as it's ever been. This is the right moment to do this. It's a historic moment, in fact. Look at what happened in December and January. The whole population is behind a change. This place is ripe for revolution. And what you have discovered over the last 2+ weeks is that, sure, you killed a whole bunch of people, but the regime is there. The regime in Iran is there. The regime in Iran is still shooting ballistic missiles. I don't know if you guys remember, but in the first week of the war, there were really cool little charts. I think I mentioned it on your podcast the last time that showed that missile launches were becoming fewer and fewer and fewer. And in day 8, you're going to hit the zero bound of the chart. And the chart had a 97% correlation. I'm like, guys, this is not about math. This is not about spreadsheets. This is about people fighting for survival. And that would be the Iranian regime. And they have stuff left with which to do real damage. Ask people that get wounded in Israel. Ask refineries in the UAE that had to shut down. Ask the port of Fujairah, which was attacked again for the second time. Yesterday, ask the Ras Tanura refinery in Saudi Arabia, which is shut down. Iraq, the south of Iraq, which is on fire, quite literally. So the regime, sure, people are dead, but they're still capable of inflicting damage. They're still capable of attacking boats. And when you attack boats like that, the insurance clubs in London that insure 90% of commercial traffic or some such ratio, they say, here's 72 hours notice. As of 72 hours from now, which they did 2 weeks ago already, you will no longer have insurance of the kind that you used to have. You can buy insurance if you want to, but it's going to be so sickeningly expensive because I don't know if your boat's going to get sunk. And so traffic has been interdicted. Now, what does that mean? Everyone focuses on oil. And I wrote that if this lasts more than a few weeks, longer, i.e. past, let's be specific, past March 31, if it goes past March 31, you will be compounding so much tension in all these different supply chains that you're going to have pulses of inflation, right? And that becomes a global macro problem. And it entails, for instance, having to reprice interest rates across the board here in America as well, right? Not just in other places. But so this is not only about oil. It's about oil. It's about oil products. It's about LNG, liquefied natural gas. It's about chemicals. It's about fertilizer. It's about aluminum. And I wrote a whole bunch of things that I hadn't even thought of yet. Now, why do I ramble like that? Is because to illustrate that you have a real intractable problem. An intractable problem means you can't solve it really easy. You can't just walk away from this, right? You're going to have to, I think, if you're the Americans and you want to stop this, you're going to have to bargain with the Iranians. And the Iranians have you. They got you in a vice, right? Because they're going to want, and they said it, they're going to want lifting of all sanctions, massive reparations, and, oh, by the way, you, Donald Trump, would then look like a loser. That is quite the opposite of the legacy that you had wanted to leave. Meaning that I think President Trump cannot afford to lose. He has to win, right? Benjamin Netanyahu has a similar issue. He can't afford to lose. He has to continue this. He has to win, right? So if you have three parties in this massive conflict that all three have to win, this could take a while. And that's what I meant with that line. Short answer, short question, very long answer. But that's where I'm at, is that these three guys, all three have to win. Break that up. How do you break that up? It's probably a sit down with Xi Jinping.
Yeah, I was just going to say, we see President Trump being quite nice to other foreign leaders in recent days and weeks. And I think you just hit the nail on the head why, at least some of the motivation, where it's coming from.
Which is, and that and a whole bunch of other things imply that the scenario that we had built our base case around, right, of this will be open in a few weeks' time, not days, but weeks. And that scenario ending in weeks, i.e. ending by March 31, we're increasingly worried that, oh, dang, dude, you're wrong. It's going to spill over. It's going to go longer. And that was the other catchy phrase that we printed was, quote unquote, some wise guy said, in history, nobody ever plans to get into a quagmire. It just happens.
And you mentioned something about this is not just about oil, and the longer it goes, I like this point you made, the longer it goes, high oil prices is going to become your least biggest problem. We've been describing this as a one variable market and with respect to the stock market, and that's been the case since this conflict started. Intraday oil prices and S&P 500 have been trading range bound between -70, -90% on an intraday basis. And last week I was looking at the 10-year interest rate, same thing, with a positive correlation, of course. And then all of those other commodities you mentioned, I imagine too, they're trading very much on the volatility of all this headline news. So what's the difference between oil, LNG, and some of these? What are the commodities that could have a longer lasting impact in the economy that that clients are worried about that you're speaking with?
Fair point. So outside of oil, you have liquefied natural gas. Liquefied natural gas is the only way to get natural gas into Japan, Korea, Taiwan. Others in Asia consume liquefied natural gas, most prominently, let's say China. India uses some, Pakistan uses some. But China, India, Pakistan all have alternatives. They can burn coal or oil or whatever. Now, the Japanese, the Taiwanese, and the Koreans could, but where the Indians have pipelines, where the Chinese have pipelines, the Japanese do not, right? And liquefied natural gas, you can't really, if you don't have gas fields of your own, you don't have natural storage. So it's a supply chain that is very taut, has very little flex in it, has no storage on the other side. And so if you have rigged your power gen in such a way that you need LNG for baseload, dude, now you're going to have to switch on other power plants. You're going to have to switch on coal. You're going to have to switch on oil. You're introducing into your Japanese economy a piece of inflation because all of that's going to cost more than the LNG did. Now, the same for the Koreans, the same for the Taiwanese. And we'll get back to the Taiwanese because they're at the whip end of many of these little supply chains. But global prices of liquefied natural gas, the market is, call it 55 BCF a day. What you have lost out of Qatar is 11 BCF a day on a 55 BCF a day market. For Asia, the seasonal decline from winter to spring is only 4 BCF a day. So 4 of a decline in demand and 11 of a decline in supply means the competition for the remaining gas is going to drive the price up. When you drive the price up, the poorer ones will switch off. That will be Pakistan, Bangladesh, whatever. And the richer ones will chase it. That I expect to be, because they have no storage, Japan, Korea, Taiwan. What that means is last year you had an $11 price with a lot of surplus this year anticipated from new projects. It was going to be a $7 or an $8 price. Now it's most likely going to be a $15 or an $18 price. That kind of inflation, which is not inconsequential, I would argue. Similar math applies a little bit later in the year because those guys have storage to Europe, like all of Europe, which was also shorn of Russian gas. So the global gas situation is going to introduce a piece of lasting inflation in gas prices, internationally traded gas prices, plus behind it, power. right? That ain't going to go away because restarting that supply in Qatar takes about a month. And I gotta suspect that the fully laden LNG boats are amongst the last to transfer the Gulf, to transfer the Strait of Hormuz. If there's any residual danger, those boats ain't going. And after you will only restart the supply chain, the liquefaction trains, after it's clear that you can go anywhere with that stuff, right? So LNG is already massively on the back foot and will not recover until, if you're lucky and you stop today, that whole piece of inflation won't last much beyond, let's say, the summer. But for spring and summer, already massive inflation and for those countries in that commodity. Then you have alumina, which is a giant smelter, sits in Bahrain. That thing shut down. That is 13-14%, if I'm not mistaken, of the alumina supply. That will introduce a piece of inflation. Most harmful is inflation through fertilizer. Nitrogen-based fertilizer, 30% of the supply of that stuff comes out of the Gulf. There ain't nothing coming now. For now, it doesn't yet mean failed harvests. It just means a piece of inflation in costs. And the same as with LNG. The ones that can afford it will get the nitrogen. And the poorer your soil gets, the more frequent you need to saturate it with nitrogen. So you need nitrogen pretty much every year in most agricultural basins. Now the competition for that stuff has intensified. If it stays off the market, you're going to start missing harvests. Once you start missing harvests, you have things like famine. And that is now, obviously, if that strait doesn't reopen and if the Iranians don't give you passage for them boats, you're going to have a little bit of a problem that is going to be very much worth watching. Chemicals is a similar story. You have massive chemical crackers in Iran and Saudi Arabia. Those base chemicals are going to introduce a piece of inflation through the IP production chains of everything, like from packaging to car interiors that are not mostly made from plastic. Then you're going to have, there was another one that goes back to Taiwan. Taiwan makes little something called microchips. And those little microchip supply chains, according to most military strategists in Washington, are actually the Achilles heel of the American economy. Taiwan manufactures those things, has suddenly a little bit of an issue with power generation because of the LNG issue. It, in its infinite wisdom, the planners there decided to switch off nuclear power plants after Fukushima. And the last one was shut off after a public plebiscite where nobody bothered to show up except for the people that wanted to shut it down. So that got shut down. So you're short power gen. And for the manufacturing process of these highfalutin machines, you often need helium to make sure that your environment in which you make these things is super, super clean and perfect and stable. Helium, you guessed it, that comes out of the same plants that live in Qatar that have been shut down. And helium is not that easy to transport. So even though we here in America produce a fair amount of that junk in, I believe it is Wyoming, I could be wrong, Taiwan is going to have a little bit of an issue with helium. So there is that. Mike, Stephen, that was just like, I think, 8 supply chains that you can think of that all have repercussions through the global economy, from which, admittedly, America is relatively insulated. All of its trading partners are going to feel this, most of which are not exactly happy with a war of choice, having brought them into this situation, and a little bit reluctant to come and help fix it. I'm being sarcastic here, but you get my drift. And so we've introduced quite a bit of friction in the global system, and I don't think that resolves all that quickly. And will bring about with it, as I said at the top of the note, a bunch of repricing along many different vectors.
It's going to be interesting how this plays out because, like, you look back at 1990, and I know there's so many differences today compared to then, or you look back even at other times the market had some exogenous shock, not even something geopolitical like interest rates shooting up in the summer of 2023. And usually when you get to a peak in the price of the problematic catalyst for the equity market, markets bottom, and then the equity market's able to look beyond the knock-on effects. But listening to you, it sounds like there's going to be quite a long tail, even when we get the strait open, in terms of how much of an inflationary impact will show up on a global basis.
I think that's right. But my point is kind of like, if somehow magically you're able to fix things right now, already you have a few problems, but you can work through it, right?
Yeah.
My point is that the longer that you don't, the more these problems all compound and they become less easy to solve, right? So the fertilizer crisis in the beginning is just a price thing, and then that solves. But if you let it last long enough, it becomes failed harvests. And failed harvest, that's famine. And famine means upheaval. And it's more of a difficult problem. Similarly with helium, right? Nobody's short helium yet. But when you are short it, suddenly you have a disruption in a pretty critical supply chain with its own ramifications. The longer it lasts, the greater the risk. It's not linear, I would expect. And you don't
Sure.
really know where the tipping points are for each of those supply chains. You're going to need to stop this war urgently.
Yeah, absolutely. And I'm thinking it from a market perspective versus an economic perspective, and meaning that a lot of our clients are trying to figure out, and economists, Nancy, Jake, are trying to figure out the economic impact from it and highlighting a lot of the positives coming into this and certainly many differences compared to 1990. But from a market perspective, again, the economic outcome doesn't necessarily always translate with the same sign to the market outcome, equity market outcome. And in a regime that we would argue we've been in since 2022, when we had the inflation shock, and also we had a big spike in oil there as well in early 2022. Since then, the number one, two, and three thing investors have been fearful of is anything that pushes prices and interest rates higher. So we could certainly see a longer tail to how long this influences the market compared to how hard it hits the economy. I think that's an interesting nuance today that perhaps wasn't quite as much of an issue in past years, certainly in the last 30 years, where inflation really wasn't a concern up until COVID.
I know it's a very fluid situation. What kind of scenarios are you keeping an eye on?
Number one, I think in terms of, if you try and rank order it to most likely all the way toward most fanciful, the most likely, I suspect, is that the Iranians will be persuaded by different trading partners and perhaps even some of their neighbors to give those neighbors and those trading partners passage, that you can sail out the fertilizer boats, that you can sail out. India was able to persuade the Iranians to let them sail out to LPG carriers. LPG carriers are liquefied petroleum gas. That's precisely what you think of it, cooking fuel, right? Barbecue fuel, cooking fuel. And if you have a country with 1.4 billion people, many of whom rely on that cooking fuel, you need that. And it means two things. One, that some people are able to deal with the Iranians, and two, that the Iranians are willing to give some people passage. Okay, let's multiply that out, right? Let's get more of these oil boats out. Let's get more of the gamma boats out. Let's get more of the fertilizer and perhaps even the helium boat out. Although the helium thing is an issue because for that you would need the liquefied natural gas trains to run. And like I said, that requires more. I suspect that Iran is in a very, let's call it, interesting position where it has these levers, right, that it can play with. And what would destroy that scenario if, for whatever reason, the Iranians say, okay, basta, we're going to mine the straits? That would be a really bad thing, right? And they have selectively apparently dropped some mines in some places, but they haven't mined it outright. That you know that because boats are going through, right? Chinese boats are going through. So a selective reopening leading to a full reopening just through negotiations behind the scenes between different trading partners, then eventually perhaps even the United States involved, so that President Trump can literally call it a victory and walk away. That would be the scenario in which sanctions on Iran get lifted. Iran gets to call it a victory. You would have a very unstable situation in the Middle East left, no question. But the president can walk away and the trade resumes and the global economy pulls back from the brink. I think some such mixture of everything I just said is possible. I'm fully biased because I want that to happen. So don't look at me for like neutral observations. I'll be cherry picking that. And if I could, I would advocate it. Another one that you can't dismiss, but that almost at this point seems a little bit fanciful, is that we have Iran's New Year approaching, Nowruz, when there's the kickoff point for a 2-week-long holiday of everyone. That's typically when people that live in the cities go to the countryside, and when there is mass gatherings, usually quite joyful. Maybe that becomes the point at which the regime finds it difficult to control the population, that finds it more easy at that point. And this is somewhat fanciful, where you could see that maybe you can achieve some kind of a revolution and an actual regime change in, I don't know, weeks, months. I'm afraid, and when you talk with people, different people from Iran or in Iran, when you ask them, so when will all of this lead to regime change, most will say years, not exactly months or weeks. But Again, history has proved you wrong in the timing of these things before. It could be the third scenario is that the larger powers of China, perhaps even Russia, prevail on the Iranians to make a deal, right? So that you don't have the Strait reopening with some selective passage, perhaps some convoys from the Americans and almost forced opening, but that you have a cleaner settlement brokered by the Chinese. I think for that reason, it's really important that President Trump and President Xi actually meet. And I'm very anxious about different parts of the administration this morning said, oh, yeah, maybe we're going to postpone that meeting. It wouldn't be a big deal because it would be about logistics. You know, there's a polite Dutch word for that. Bullshit. It's never about logistics, right? It is about you're either going to meet or you're not going to meet. And logistics then become the excuse. So you're going to want them to meet. Them not meeting or them meeting later, my humble opinion, would be a sign that, yes, this war is spilling over. It's going to last longer. It'll be messier. It'll be everything we've just talked about. Sorry, that's a messy answer, Stephen, to a very straightforward question.
It's a complex scenario, so I really appreciate you helping provide some context and ways to think about this. Another question I wanted to ask is, we had you on earlier this year, and regrettably, you were right about geopolitical risks on the horizon. Is there anything today on your radar that we should be keeping an eye on?
Yeah, that's a neat one. Let's say that your information source is, let's not name names, but let's call it Fox News, right? And that you're fully tuned into the information channels of the headsets of this world. And you would get the impression that we're actually winning. And this is all but done. If somehow I'm just flat wrong and Hegseth and others are flat right and we are somehow winning this, China is on the back foot. We go to China at the end of the month and we explain to President Xi that he no longer has a solid foothold, military and otherwise, in the Middle East, and that he needs to be a little bit more careful with his threats around things like Taiwan, Japan, the South and the East China Sea. And then you would ask Marco Rubio, what's next? And perhaps he would say, in the background, there's still Cuba, there's Nicaragua, there is, don't laugh, Greenland. There's a few more ways in which we can have geopolitical friction, right? In that narrative, perhaps we are not done. Now, you can also tell from the way I talk about it that I don't believe that is actually the case. As it stands now, right here, I would argue that Prime Minister Carney, if you remember in Davos, which was only, I think, 8 weeks or so ago, seems like an eternity ago, where he spoke of a rupture of the international system as it had existed for the better part of 80 years since World War II, that you have this rupture, that you no longer play trade or military-wise or international law-wise by the old rules. And you've created a vacuum where you don't yet have a new structure. That's what I worry about, where you don't have that new structure yet, where you still have this like vying for position, this sort of establishing of the hegemons and the hegemonies, right? Where you have trade, where you're no longer only focused on just-in-time inventories, for instance, but you have to worry about just-in-case inventories, whereby, in other words, things go slower, productivity will suffer, and costs will be that little bit higher, right? And that you judge your market sectors and individual companies that have international businesses differently on the basis of that new system. So maybe that goes a little bit too far, Stephen, but if you ask me what's next, you probably shouldn't ask me without us all sitting down with a glass of whiskey behind the fireplace, right?
Perhaps this is the 4 or 5D chess that the administration is playing to ultimately get manufacturing back in the United States, where it's more energy secure and trade secure and war secure.
Oh, but that is exactly right, I believe. I think that the intended or unintended, those are some of the patterns that Nancy has been talking about for the better part of 10 years. And you see that. And that folks that did that now are in a less vulnerable position than they would be otherwise. And that, I think that's absolutely fair. And you highlighted it. America is going to be in a pretty decent position, right? You have all these resources. The only thing you're really short on is those refined rare earth metals, right? But everything else you have plenty of in your own hemisphere.
That is showing up in the markets since this conflict started. I remember the first month and a half this year, we had the weakest U.S. relative performance to start the year relative to the world in decades. And as soon as this started, I think investors recognized, and those that were especially worried about a longer duration conflict, money's been coming back into the U.S. and U.S. equity markets have been outperforming. And it's not just because of Mag 7, it's because of everything you just mentioned, Jan, I think as well.
Yes. And I think that Europe has some choices to make. It's remilitarizing, it's reindustrializing. It will be that little bit harder with more expensive energy, but it doesn't take away from the drive of doing that and the motivation for doing that. The Middle East suddenly is in a very turbulent phase, of course, and you have to seriously worry about how things look when the dust settles. Will Iran still be a threat to the neighborhood? The threat that it showed itself to be. It is shooting missiles and rockets into all of its neighbors. Okay, if you're the neighbors, you probably do want a different regime in charge there. What if you don't get it, right? So the Middle East, Asia has shown itself to be extraordinarily vulnerable, except for not China. China has built buffers and has relationships that insulate it to a fair degree from everything that's going on in a way that Japan, Korea, India are not insulated. Right? Yes, Stephen, markets have a lot of figuring out to do, but I think that you can maintain that America itself is not going to be in a bad place.
That's a great way to end it on a relatively positive note. Obviously, it's a very complicated situation, so we really appreciate all of the insights you're able to offer and share with us. And we'll be continuing the conversation, hopefully with resolutions sooner than later.
We hope you enjoyed today's episode of What's Next for Markets. You can subscribe to the show on Apple, Spotify, YouTube, or wherever you get your podcasts. Be sure to follow Michael on X at Michael Cantro. If you like the show, please let us know by leaving a positive review. The preceding commentary is not financial advice. You should always seek appropriate financial advice from a professional financial advisor in your state. You should not consider this as a substitute for these services. Piper Sandler does and seeks to do business with companies covered in its research commentary or coverage. As a result, investors should be aware that the firm may have a conflict of interest that could affect the objectivity of this commentary. Investors should consider this commentary as only a single factor in making their investment decisions. For full disclosure information, visit www.pipersandler.com/researchdisclosures.